Is it possible to have a long-term investment portfolio that is balanced and diversified while only purchasing 3 assets? Before we dive into this question, we have to talk about one thing. On the MechMoney website, one of the main rules that we talk about is that we do not hold a position in anyone's suggestion. For the purpose of this video, anytime we talk about a specific asset, it is not a suggestion to hold a position within that asset. So that means do not go out and buy it based on what we talk about. This version of the video is from an American perspective using US dollars. The answer to the question that we asked originally is yes, we can actually hold a balanced and diversified portfolio purchasing 3 assets. Let's jump into the answer. It is possible to purchase 3 assets and have a balanced and diversified portfolio. And of course, the way we do it is by purchasing ETFs. So let's take a look at some of the ETFs that we would be considering in order to make this happen. The first one is IVV. It's from iShares. IXUS is the second one from iShares, and AGG is the third one from iShares, representing our fixed income. Now, if we take a look at IVV in more detail, that would be over here. So why would we end up taking IVV, the core S&P 500 ETF? Well, it's large amounts of exposure as point number 1 on the iShares website to established US companies. That's something that we're interested in, making sure that we have a good diversification among the US equities. Number 2, low cost, tax efficient access to 500 of the large cap US stocks. That's something we're really interested in. We want to make sure it has low cost. So the expense ratio of this particular ETF is 0.04%. That is very good. And number 3, use at the core of your portfolio to seek long-term growth. That is by far one of the most important things that we want to do, is we're using it as a core to our portfolio, and it's representing the core as our US equities. And we are seeking that long-term growth over time. We want to make sure that our portfolio is meeting the 6 to 7% growth per year. That represents a good solid portfolio. And of course, that is on average. It's not in one particular year. It's averaged over several years, like let's say 10, for example. So if we scroll down a little bit further, we can see the yield that this one happens to be giving off. The 12-month trailing yield is 1.66%, so that's fairly good. Again, we talked about the fees, 0.04. That's excellent. Taking a look at the top 10 companies under this ETF, Apple, Microsoft, Amazon, Facebook, you got Johnson & Johnson, you got Alphabet Inc. So a lot of information technology as well as financials, healthcare. Energy appears as the 10th item on this list. So it's diversified in a bunch of different sectors. The weightings, of course, are all listed here, so you can see that. The weightings are relatively low. And if we end up selecting the all, we have 51 pages of ETFs being covered under this one ETF. So that is very good. Exposure breakdown, information technology representing 25%, nearly a quarter. Then going into financials at 15%, healthcare at 14%. And then from there, it kind of drops off to under 10% or so as you get further into it. So this really represents the core US equities ETF for us. So the second one that we happen to have is the IXUS. This one here is iShares Core Total International Stock ETF. Now, if we look at our expense ratio, 0.11%. Relatively low, so it's a low cost comprehensive access to non-US stocks. This is exactly what we want, because we want to make sure that we're not overlapping the other one that we just talked about. The number 1 point that iShares has here is its exposure to a broad range of international developed and emerging market companies, and that's exactly what we are interested in, getting those emerging market companies as well as the international developed countries. So if we take a look at some of the information here, our 12-month trailing yield being 2.28%, that's fairly good. Fees, we already talked about this being 0.11%. I'm very happy with that. Looking at the top 10 companies, I recognize Alibaba, I recognize Samsung, Toyota. There's a few that I see there. and their countries that they earn. That's one thing that we're also interested in, is the exposure breakdown in terms of country. So Japan is actually at 17%, United Kingdom at 8.5%, China at 8%, France at 6.5%, Germany at 6%, Canada at 6.08%. So the only thing that I would say that I don't particularly like, however, I was not able to find something that kind of swayed in the direction that I would personally be looking for, is for Canada to hold a higher percentage of the market within this ETF. I think Japan at 17%, I feel like that should be Canada at 17% and Japan maybe further down the line. But I still believe that this is something that would fit the bill for what I would be trying to do if I wanted to hold 3 assets within one portfolio. So that really covers it for our international ETF. The last one we can look at here is AGG. So the AGG represents iShares Core Aggregate Bond ETF, and of course this is of US fixed income bonds. So number 1, broad exposure to US investment grade bonds is what iShares is saying. Number 2, a low cost, easy way to diversify a portfolio using fixed income. The management expense ratio on this is 0.06%, which is of course really low. That's what we're looking for. And number 3, use at the core of your portfolio to seek stability and pursue income. So this is really another core ETF to purchase, representing a significant amount of your portfolio, which is exactly what we're using this for. So if we take a look at the trailing yield for this ETF, it happens to be 3.14%. Very good. This is our fixed income portion of the portfolio. This is what we're looking for. Fees, we already talked about this, 0.05%, very low. If you look at the holdings, it's very similar to many major ETFs that are within the fixed income area. United States Treasuries, Federal National Mortgage Association, the issuers, all the different banks. The exposure breakdown consists of anything from treasuries, industrials, financial institutions, and so forth. So that really covers it for our fixed income section of the portfolio. Let's take a look at how the performance would end up resulting. So if we end up looking at our date from January 1st of 2017 and then running into December 29th of 2017, we can fire that in, December 29th of 2017. It comes up as percentage change, 18.66% for the first one, 24.2 and 1.07. So it looks like the performance of this portfolio would have done very well in 2017. If we take a look at how this works out in terms of our investment amount, we start with an initial investment of $100,000 and our IVV is broken down into 40%. IXUS is broken down into 20% and AGG is broken down into 40%. This represents our 60-40 split between equities and fixed income, where our US equities would be at 40%, our equities within other countries is at 20%, and our fixed income is at the 40% mark. So if we would have invested $100,000, we would have ended up at the end of the year at $112,730, which would have been a portfolio earnings of that $12,730, resulting in a net percent change of 12.73%. And this is also not including the dividends returned from all the ETFs, all 3 ETFs. So the performance of this portfolio is very good. If we ended up taking a look at how it's done this year, we can fire in the date 2018 and we'll stop at the Friday before this week, which is the 23rd of February. Put that in here. So we see that the percent change for the top 2, 2.17, 1.27, and the last one there, our fixed income, has dropped negative 2.3%. So that is affected on this side by $190.2. So that's actually not that bad, considering we did have a pullback that occurred at the beginning of February there. January was very strong. However, February we had a significant pullback, so it results in almost a net zero. So the pullback really didn't have much of an effect. We're still up that 0.19%, and there's still many more months left to go within this particular year. So I would say that this is a really good performing portfolio. If you're looking for a portfolio that is very easy to maintain and simple to set up, purchasing 3 ETFs is entirely possible to make up that portfolio. Now, a couple things that you need to make sure you do is that you select weightings that match your goals. We looked at examples that had a 60-40 weighting split. If you want to be more aggressive, you can do an 80-20 split, or if you want to be a little more conservative, you can do a 50-50 split. In my main portfolio, I have a 75-25 split. So it's a little more on the aggressive side. You just got to make sure that you set something up that matches your goals. The other item to mention is that you want to make sure when you purchase your ETFs that you have a diversified portfolio which covers the entire world. You don't want to be focused in on just Canada or just US. You want to make sure that you have the entire world covered. And that is really the couple pointers that would make you successful in choosing that exact portfolio. Now, if you like these videos or you want to see more about investing within long-term index funds or even talking about ETFs in general, make sure that you invest in the subscribe button, and I'll see you in the next video.